Welcome, ladies and gentlemen, to Commodity TV in a new edition of on our online interview episodes, just back from PDAC, and we move on with Sibanye-Stillwater. And James Wellsted, directly from South Africa, is here with us. James, how are you? Good to see you.
Hi, Jochen. Good to see you again. It's been a while.
Yeah, it has been a while, definitely, but a lot of things happened, and it looks like that, you are also improving the company much, much more. It was a hard time for you also last year, and it would be good to do an update here. 2024, you were, I would call it a little bit in the restructuring mode. Maybe you want to comment that a little bit.
So our restructuring actually started in 2022 when we first restructured the US pCAM operations in anticipation of palladium coming down further. We didn't expect it to go to below 1,000 though. So unfortunately, we've had to restructure the US operations 3 times now. And I'll talk a bit about that. But then in the second half of 2023, or actually at our results in the middle of the year, we said that we were now going to be focusing on preserving the balance sheet by optimizing cash flow and profitability from our operations. So closing, and we showed the market we're going to close certain PGM shafts at our SA PGM operations and some of the gold shafts at our gold operations, which we did before the end of the year. We also restructured for the second time at the US at the end of last year to try and bring costs down from about $1,900 per ounce to about $1,350. And that was quite successful as well. But again, the price has been at about 1,000. So we've still been incurring losses. Mm-hmm. So, that took most of the second half of 23 and into 2024. But we've started to see the benefits coming through in the second half of 2024. So the last 6 months, we've seen quite a big improvement in profitability. So actually, what's been interesting is the outcome of these restructuring is that we've had an 18-month period, so 6 months, 3 6-month periods of stable earnings, basically, or stable EBITDA, whereas most of our peers are still suffering the impact of lower prices and rising inflationary costs. So their earnings keep coming down. So we've actually stabilized our earnings now. And we're seeing the benefits of the diversification strategy that we've carried out over the last 10 years. So previously, PGMs was over 90% of our profitability and cash flow. Now it's very low because the PGM prices are close or in the operating cost, industry operating cost profile. But what we've seen is some of the other acquisitions, like the recycling, tailings reprocessing, etc., are now contributing positively and positive cash flow. And then gold has now come through. And our gold operations haven't really contributed for the last since 2018 because of various disruptions, strikes, COVID, etc. And they've come, the benefit of having gold in the portfolio is now apparent because gold went up by 2.5 billion rand year on year, the contribution. It was 1 billion more than the PGM contribution, and it made up about 57% of group EBITDA. So it's now the biggest component of EBITDA for the group. So I think we've done quite well. And going forward, we further restructured the US PGM operations in the fourth quarter of last year. We closed Stillwater West, or put it on care and maintenance. So that reduced our production by 200,000 ounces. But what it does is it'll bring our costs down by about 45%, or losses by about 45%, sorry. And then we stand to benefit still from the Section 45X tax credits that the government has, the US government has published in terms of the IRA, Inflation Reduction Act. What that is 10% credit on operating costs for our mines and 10% credit for the operating costs at our recycling business. So going back to 2023, it's about $120 million credit. 2024, about a $90 million credit. And then for 2025 and onwards at this kind of production level, it'll be about $60 million credits a year. So we will have brought down on an all-in sustaining cost basis the losses from our US PGM operations for 2024, the implied losses of about $161 million. down to close to $40 million.
Mm-hmm.
So we're getting very close to that break-even point.
Mm-hmm. If you would not no longer be granted those credits, what can you do to compensate that?
So, I mean, it's as I said, that's about 60 million. So we would then be about 100 million negative, or just over 100 million. So we have got measures that we're taking now to try and modernize and improve efficiencies, etc. But we think we can quite easily lift productivity from those mines with more focused mining, and a 50,000 ounce increase in production is a $200 per ounce reduction in cost, all in sustaining costs. So, it might take a bit longer to get to that break-even point, but over 2 years or so, I think we can get there.
Mm-hmm. Okay, super. If I look at your all-in sustaining costs from the gold operations, $2,126 per ounce, can you get that, let's say, also further down?
Yes. I mean, the restructuring benefits from last year are still coming through, and we still had some disruptions to production, which made costs a little bit higher than where we'd expected them. But at this point, there's no major, without closing more shafts and retrenching more people, there's not much opportunity. So it's about trying to manage the costs. I mean, the current gold price is, and I'll talk in rand per kilogram. So it's obviously almost $3,000 per ounce, but 1.7 million rand per kilogram, and those costs are at about 1.3, 1.35. So we'll be making very good profits, and because they are quite high, have got quite high fixed costs, they're obviously very leveraged to the higher price, and the current spot price is about 20% higher than the average for last year. So you should see that coming through in the earnings.
Okay, super, perfect. Let's talk about shortly on your Keliber upcoming mine, I would call it, a Keliber lithium production, in connection also with you moved out of the Ioneer joint venture. So what was the reason for that move out of Ioneer, and what is the status now with Keliber?
Yeah, so the Ioneer, the Rhyolite Ridge project, we had a right to acquire a 50% interest in that project on delivery of certain permits, a feasibility study that was at the required level, etc. So that they got the environmental permits last year, and they delivered the feasibility study towards the end of last year. And our team has obviously been going through the numbers, assessing what it means for us. And then the board reviewed all of the information and came to the decision not to proceed or not to follow through. And I think it's a function of two things. First of all, there was a environmental called TM's buckwheat that grows in that area where they're planning to mine, and they had to redesign the pit to exclude that area, which obviously then adds to the capital and the costs, and that would impact on the outlook for the project. And in an inflationary environment that we've been in, costs also impacted by inflation. And our board, also looking at the current situation, uncertain economic outlook, geopolitical outlook, prices being quite low. We've just rebuilt our balance sheet and restructured the operations. Felt that it wasn't the right time to invest 490 million at least in a project like this at this point.
Absolutely. So, with
Keliber, we've continued to invest. We are still positive about the outlook for lithium, even though we are in an oversupply environment now. That is a consequence of the $60,000 to $80,000 per ton lithium prices that we experienced in 2021 and 2022. There has been a slowdown in global BEV growth, but we had always forecast much lower penetration rates than the market consensus, because we just couldn't see from our fundamental analysis where all the metal was going to come from that's going to supply the battery demand. And we still believe that. And with these low prices persisting for longer, it's another negative or non-incentive to invest in new production, which will come through, we believe, from about 2028 in deficits in the market. And then obviously prices will respond to the deficits, and we'll be then delivering lithium hydroxide, European lithium hydroxide from Finland into the European market.
Yeah, which makes much
and
more.
As you know,
Yeah.
as you know, in this global environment with tariffs and trade wars going on, that's exactly our strategic positioning in Europe and America was based on our understanding of these trends, that there's going to be much more resource nationalism, protectionist type tariffs and sanctions, etc., and focus on ensuring supply of critical metals, local supply of critical metals, and developing local supply chains. And we think we're very well positioned for that.
Absolutely. It's also much greener because you must not ship back and forth by 40, 50,000 kilometers all your stuff. You can do it by train, and then you are there. Right?
Exactly. And obviously Finland's got very green energy generation as well.
Lots of hydro, etc. Yeah, exactly. Yeah, that makes absolutely sense. When do you think Keliber would be in production then? 2026, 2027?
Oh, so the project's actually on schedule. The refinery will be cold commissioned towards the end of this year, and then the concentrator in the mine in April 2026. So we'll begin with the hot commissioning from April 2026. It should take between 12 and 18 months. We'll confirm that a bit later. But that means we'll be essentially producing European lithium hydroxide into the European market from 2027, 2028, which is exactly when we expect the deficit.
Yeah, that makes really sense because everybody wants to have your lithium for sure. Another metal for battery or the new energy story, as I call it, is nickel. So how is it going with the Sondoville nickel refinery? It looks like that things are improving there. You brought the costs also further down, and you almost doubled production, it looks like.
Yeah, we've actually stopped the production of nickel, though. We never bought that facility for nickel production. What we were looking at was converting it into a nickel sulfate plant. What we've instead found out, or our hydrometallurgists, etc., in Europe have found out a very exciting project that we're pursuing or doing feasibility on called GalliCAM in France, obviously Gallic and CAM. So it's to produce a pCAM, which is a precursor cathode active material, nickel-based, for the European battery industry. So we've got a link with the Verkor, which is a French battery manufacturer that's developing at the moment. We invested in their bonds, and we've got equity in that company, and we'd like to be represented throughout the value chain in France in the battery industry.
Okay, super. How's it going in Australia, the Century zinc retreatment operation?
So they had a tough year, but are profitable. So they had floods in the beginning of the year, and then a very big bushfire, which burnt all of their piping infrastructure in Q4. But zinc is in tight supply at the moment. The market's in deficit, and treatment charges are at record lows. So we're getting the benefit of that, and they're profitable. And the outlook for 2025 is very positive as well. But we're also looking beyond the Century zinc processing. Obviously, we are looking at the Mount Lyell. We're proceeding with the second stage of that feasibility for the Mount Lyell copper project in Hobart. And then we will be also looking at an opportunity for, after the zinc tailings have been processed, to leverage the infrastructure at Century to process potential potash deposits or big potash deposits in the area. Some of it for agricultural purposes, but others for lithium, obviously batteries and the battery industry, essentially.
Okay, super. Before we come more to your company balance sheet and capital raises and all those kind of things, one question to the uranium side of your future business, which I always see as the big joker. Are there any news?
So uranium, yes. So we actually have progressed it. So the Beatrix 4 uranium, the Biza project, we've actually done a deal with a group called Neo Energy, which is listed on the AIM, and they will pay us 250 million rand. And then give us equivalent of 250 million shares, which is 40% in the company. And they will look at developing that project. And then we're proceeding with the tailings, which is the the uranium on the surface that's already in tailings with gold, and we're looking at different alternatives to extract value from that. So we'll probably in the next 6 months we'll have something to announce to the market, but that's looking very exciting as well.
Okay, super. Would that mean that by next year you could already produce uranium? Or is that too early?
No, it's a bit early. Yeah, it'll take a bit of time because we've got to build. Obviously, we've got a uranium processing circuit at Cook already that we were using before, but I think it's probably a bit early to next year's a little bit too soon, I think.
Okay, good. I was hoping for it. Okay, super. Are you affected in any sense of, let's say, US tariffs and stuff like that? Or is that something you say, no, we are not?
South Africa, where most of our operations is obviously being affected like everywhere else. I mean, Europe as well.
Oh,
but,
yeah.
Again, we're looking at local supply. I mean, with pGMs, it's such a concentrated market. I mean, South Africa supplies 70%, Russia supplies 40% of palladium, and then it's only really our mine in Montana that's the other source of PGM. So we don't expect anything negative from what's going on at the moment, and there's been no indication that there'll be an impact on us. But in fact, we still think that the reason we're confident or positive about the IRA and Section 45X is because all of these actions being taken, tariffs, etc., it's all about protecting local industry and developing the local economy, which is exactly what Section 45X intends to do by supporting production of critical minerals in the US. Yeah.
Mm-hmm. Okay, super.
And sorry, we also got in the Europe with the GalliCam project, we actually have received a grant from the Innovation Fund, the European Innovation Fund, of 144 million euros,
that's nice.
conditional as well. So you can see where that strategic positioning is now starting to come through in value.
Mm-hmm. Okay, super. Then one question about your transaction with Glencore Merave, because that interests me. I'm a shareholder in your company, also in Glencore. So where do you see here the benefits for your company, or let's say overall for the chrome product?
So essentially, chrome has become quite a big part of our revenue at our PGM operations. It's a byproduct, but we've grown our chrome production from about 1.5 million tons when, in 2017, 2018, we're now at about 3 million tons. Mm-hmm. And it's become a big, the industry in South Africa currently is being carried by chrome revenues because the PGM basket is so low. Lonmin in 2010 or 2011 entered into agreement with Glencore where essentially Glencore takes their chrome and Lonmin gets very little commercial benefit for it. And that would extend at current delivery rates, volumes. It would extend to 2060 before the required contracted volumes were delivered. So the agreement we've entered into with them allows us to increase production at Marikana, which we didn't have a incentive to do before because we weren't going to benefit commercially. And Glencore will now run all of our chrome plants, and they will apply their proprietary chrome technology, fine chrome technology, to increase yields, which will mean we'll deliver that contracted volumes by 2033. And then we'll get a much higher, almost 80 to 90% benefit of the value from the chrome from Marikana. And what that means is that for future PGM projects as well, which we're looking at, which could be developed relatively low capex, that extra value creates quite a strong commercial underpin for those projects. So it's very exciting and very value accretive for all parties.
Perfect. Fantastic. Good to hear that. Then there was also one thing in the past, which was, let's call it not so positive. You had a problem here with Appian. Is that solved now, or what is there going on?
No, that's quantum case. So last year we had the initial case on whether it was a material event or not, which we didn't. They were successful. So the judge ruled that it wasn't a material event. So now in November this year, we'll be going to the quantum trial, which is effectively they will claim losses, assumed losses, and then the judge will declare any damages or payments that are required. again, we're quite confident. Appian has indicated the latest claim's been about $522 million. But again, we've heard there was in the media a story that they'd sold Soroti, the copper mine, and the number we're hearing is around $400 million, which obviously would be offset against that value. So listen, we're fairly confident that there's not going to be a significant damages, because they have actually benefited from profitability from those operations in the interim.
Okay. So all the lawyers made money.
Well, you know how it is.
As
Lawyers
usual.
and tax advisors.
Those are things which are really for sure. That's right. Yeah, let's come to your balance sheet. I think a lot of investors had maybe a little bit the fear that your balance sheet gets a bit overstressed, too much debt, etc. How do you structure that? To my understanding, you did some very good moves onto that, and also you did that wonderful stream. Can you please comment on that?
So again, after doing the restructuring in the beginning of in February 2024, we announced to the market at our results that we would now be rebuilding or reinforcing our balance sheets. I mean, we were still sitting on about 1.4 times net debt to adjusted EBITDA, but there were concerns in the market with the overhang of ISIN, potential Appian, etc. And this, the analysts were projecting losses from our operations because they hadn't been able to factor in the restructuring benefits. So we spent quite a bit of time in the beginning of the year assessing all various options, and we actually some very innovative funding options that we looked at. And we've effectively increased the liquidity or reinforced our balance sheet by about 36 billion Rand over the year. So a number of things. We obviously refinanced our RCF, our revolving credit facility, and increased the size of that facility. We got the banks agreed to lift the covenant cap from 2.5 times net debt to adjusted EBITDA to 3.5 times, which provides quite a lot of relief for us. And then we raised quite a lot of capital. So we did a gold prepay in August, which was $100 million, and still gives us exposure to upside in the gold price. So it'll be more than $100 million in total once we've delivered everything. We did a Chrome prepay in December, which was $50 million. And then, as you said, I mean, there are a couple of other things. We raised a green loan, Keliber, supported by some of the Finnish and European entities. So that was very positive. And then we did the stream with Franco-Nevada, which we announced in December. And that's a very, very smart transaction, because effectively we're streaming the gold in the pCAM out of the pCAM basket of metals, which is less than 2% of the production, of the 4E production. And a little bit of platinum, less than 2% of platinum over 20 or 25 years. So we retain 100% upside to palladium and rhodium, and you would have seen the rhodium price went up recently quite substantially. And we essentially have got 98% upside to platinum and all the other metals in the basket. And gold, obviously, at a relatively high price at the moment, so we're comfortable locking that in. And we raised effectively $500 million or 9.4 billion Rand. And just to put that into context, when we bought the South African pCAM assets, which is what the stream is based on, we paid 21.4 billion Rand in total between 2016 and 2019. We've already repaid the cost back 6.5 times. So net of the 21.4 million, adjusted EBITDA less capex, those assets have returned $117 million since 2016 and 2019, 7 years effectively. And the stream now takes that up to $126 million, 126 billion Rand, sorry. So that's substantial. And for 2% of our gold and less than 2% of our platinum, we've effectively 9.4 billion is 46% of what we paid for all those assets. Mm-hmm. And it's just streaming a little bit. So you can see the value that those pCAM assets have brought for us. I mean, they're incredible value generators, and they've still got 30, 40 years life ahead of them as well.
Okay, super. So would you say the worst is now behind you in that sense that you can, maybe more concentrate on making profits because you had the write-downs, you have restructured the balance sheet, you did that all, and it looks like business, is still spitting out cash, of course. I mean, you're on the one hand, you're buying back shares. I saw that in your report. But on the other hand, Sibanye was always famous for dividend payments. So do you think by next year, maybe that a dividend payment could be considered, of course, depending on profits?
Yeah. So we haven't suspended our dividend. And in fact, just to put in context with the this refinancing and the reinforcement of the balance sheet. So as I said, at the end of last year, in the middle of this year, our gearing or leverage was 1.4 times net debt to adjusted EBITDA. By the end of the year, before the stream, we were at 1.7 times. Mm-hmm. After the stream now, we're back at 1.1 times. So we're below. So we've actually gone below where we were in June. So very, very solid position. And as you said, in terms of cash flows, we expect the SA PGM assets to be cash positive this year. The gold assets will be cash positive. Australia, the recycling assets will be cash positive. Will be much lower losses from the US PGM operations. And at Sandouville, where we're busy with the, pursuing the pCAM projects. And importantly, since 2023, our capex has gone from 22 billion rand. This year, it's forecast at 17 billion rand. And then next year, because the capex at Keliber will be done, it'll be down between about 12 and 13 billion. So it'll halved from 2023. And that's a significant increase in cash flow. So again, our dividends are based on normalized earnings. Mm-hmm. We haven't generated normalized earnings for the last 2 years, and hence why we haven't paid any dividends. Mm-hmm. But yes, I would say the outlook looks quite positive for a dividend at some point.
Super. That was a great final word. The outlook looks quite positive also for dividends. I love that. As all the Europeans, especially the Swiss and the German shareholders would love to hear that. And I think things are going to the really positive side here. I mean, the gold price will rise further. I'm pretty sure on that because the world is putting on so much debt. There is no real alternative. And from that perspective, I wish you extremely well for everything. Yeah, please keep us posted. And I would say just keep it going.
Thanks, Jochen. And just sorry, I said potash earlier in Australia. It's actually potassium. Sorry about that.
Okay, no problem. So we have corrected that also. Fantastic. James, thank you very much. We wish you well.
Thank you.
Yeah, ladies and gentlemen, there was James Wellsted from Sibanye-Stillwater. Yeah, one of the world's largest platinum and palladium producers, also one of the real large gold producers. And I must say, things have turned a lot to the positive here. 2024 was again a good year for the company in that sense that they really cleared everything. And now also the balance sheet looks much, much stronger, much, much better. This is always important in such a global environment we are in. And I like the fact that we have lithium, nickel, special battery ingredients here, what they are producing and will produce then in the future here, and also in Europe for Europe. This is really fantastic. And also the South African gold production has really also improved. Costs are also in control and under management. And I really like that. And hopefully by next year onwards, we will get a dividend back. So from that perspective, from that side, thank you very much for watching us. Check out Sibanye-Stillwater at those low stock prices. It makes really sense to have a look on this fantastic company. And all the best, and bye-bye from Switzerland.